Hey everyone, PK here. Welcome to this video. It's going to be a really interesting video. I'm sure you're going to want to stick around right till the end. I'm going to be talking about the one location across Australia where you can make 5 to 10% growth, 5 to 10% growth in the next 6 to 12 months. Okay. So I know that there's lots of reports that you can buy to supposedly find hotspots. There's a million buyers agents out there that supposedly know all of this, these hotspots, but want you to charge or spend $10,000 or $15,000 to find them with those buyers agents. What I'm going to be doing today here is just educating you. I just want to give you a bit of a flavor for what you can achieve by yourself, for yourself, in a self-sustained way if you just learn to educate yourself in property investing. Okay, so this video is going to go for about 10 minutes and I'm going to reveal the area, the location where you can make 5 to 10% capital growth in the next 6 to 12 months. But I also just wanted to tell you the reasons why, okay? Because that's almost more important than where, the why. If you understand the why, then you're self-sufficient. It's like teaching a person how to fish rather than giving them a fish. I'll be giving you the fish as well, but by teaching you how to fish, you don't need a million buyers agents or a million consultants or a million hotspot reports that supposedly have all the secrets, whereas in fact they may or may not, okay? So my business model, for what it's worth, is to teach, right? Because by teaching, you actually learn. It doesn't take much time and you can save the money and do this stuff yourself. You can actually create a passive income for you and your family without spending much time at all. You don't need to be a rocket scientist to understand this stuff. And the other thing about this suburb or this location is actually it's positive cash flow. All right, it's positive cash flow. So huge growth potential plus positive cash flow. And if any of my clients are watching, you know, I'm sure there's probably dozens and dozens of my clients watching this video as well. We're not investing in this suburb anymore. Okay, so just a bit of a spoiler in some sense. For those of you who aren't my clients and were sort of really eager to find this location and invest, I'm not saying don't invest, but all I'm saying to my own clients is this place is going to have more growth, like I've said, but you know, we'll speak about it one-on-one anyway, but this is not where we're investing. This is where we invested 2.5 years ago. All right, so for those of you who are my clients, that were my clients 2.5 years ago, you'll know exactly why. But let's go through it, okay? So there's about 30 to 35 different factors that I consider. I've understood their, each of those factors coefficient, or in other words, their relative weightings when it comes to predicting capital growth. We've understood the trends that we need to analyze in order to say, yes, this suburb or location is good, and also what threshold each data point, each factor needs to be beyond to say this is actually strong, okay? So I'm not going to be going through everything in 10 minutes. It's not possible. You know, my course is huge. You know, it takes, 10 to 15 hours to complete. But what we'll be doing is covering some things so you can get a bit of a flavor of why this suburb or this location is actually going to grow. Because I don't want to tell you my opinion. My opinion is useless. Just like your opinion, just like anyone's opinions. They're just opinions. So what I'm going to talk today about is data. Okay, so let's go through it. So the location is Mildura. Okay, so let's unpack why Mildura will increase by 5 to 10% in the next 6 to 12 months. But this is where we were investing 2.5 years ago. And I've just got my laptop here in front of me. I'm going to go through some data points and just explain the reason why Mildura is going to continue to pop, going to continue to bump up in price. And by the way, it's also positive cash flow still, even despite the price increases. Okay, and I'm not going to talk about population growth. I'm not going to talk about migration. I'm not going to talk about this mass exodus from capital cities to regional. I'm not going to talk about working from home and how that supports regional centers. I'm not going to talk about income growth over the long term. I'm not going to talk about infrastructure. None of these things, if you've been watching my videos, really have any impact on short-term growth. And when I say short-term, I mean 1 to 5 years. That's what we want our suburb to increase within, so we can take the equity out and go again. We want to recycle that debt, recycle that equity, refinance, go again and again and again. The new lending standards will further enable this strategy. So, whoever says, oh, look, I can't guarantee short-term growth, property investing is a long-term game, we need to wait 15, 20 years, don't give that person a cent, okay? Because we can predict short-term growth. It can be done. And in fact, that's what we did in Mildura 2.5 years ago. So let me take you through some data factors, just so it's not just me, regurgitating my opinion, which is a bit useless. So let's go through it. So Mildura in about 3 years ago, so August, September time, 3 years ago, 2017, was at about $250,000. Now it's at about $310,000, $320,000. That's the typical value. That's the median value. I'm not going to talk about median value too much more in this video, but suffice to say that's what it is. So, we've experienced about 20% growth in the last 2.5, 3 years from where we were investing. Now, a suburb that's already experienced that sort of growth, now the data suggests it will continue to go up, but for my clients, they all know that we don't want to be buying at the peak. We want to buy at the bottom of the cycle, and that's exactly what we did in Mildura. So, for those of my clients that have been messaging me saying, oh, you're giving away the secrets. No. We're not investing here anymore. We've already done that. There's plenty of other locations where we're going in right now. And my clients, you know that because you're doing the course. All right, so it's had some great growth. Percentage renters on market is a little bit high, close to 40%, and that's because a lot of investors have popped into Mildura. But the fact is that when percentage of renters versus owner occupiers is really high, but vacancy rates are low, that cancels that other one out. So you can have percentage of renters as 60%, and you'd say, look, the market's saturated with investment properties, there's too much competition between landlords, but if vacancy rate is super, super low, it cancels that one out. And what is vacancy rate? Right now, it's less than 0.5%. It's 0.47%. When we were investing there, it was 0.6%. Okay, so it's been really tight, which cancels that relatively high percentage renters data point out. Days on market, how long does it take for an average property to sell? When we were in that, in Mildura, when we were buying there, it was under 50 days. Now, in August, it was the first time it's been back under 50 days. So in the middle there, it increased. Now it's back under 50 days and it's trending low. What that means is it's getting quicker and quicker, easier and easier to sell a property, less than 2 months. And the most important thing is not just the threshold, but it's trending downwards. And that's what we really like to see. Online search interest ratio. So for every property for sale, how many people are online, domain and realestate.com, clicking into Mildura? Right now, it's close to 400 people per property. Back when we were investing 2.5 years ago, it was also very strong, but it's trending really high. Okay, so generally the threshold I like to see is about 550, but a regional center is never going to be as popular online on domain and real estate as capital cities. So we compensate that, and 400 is sufficiently high, but the most important thing that I like to see is it's trending up really, really nicely. Gross rental yield. So right now it's 6%, 5.93%. That before tax, before depreciation, is giving you close to $5,000 in the bank, positive cash flow every single year, even after accounting for maintenance, even after accounting for a couple of days of vacancy. When we were buying there, it was also the same, 6%, right? So what that tells me is that prices have gone up 20, 21, 22%, But if yield has stayed the same, that means the rents have increased. And that's exactly what my clients are telling me as well. Rents have increased $30, $40 over the last, what am I saying? No, it's actually more like $50, $60 per week over the last 2-3 years. So that's really healthy to see as well. None of these data factors in of themselves have any meaning. You need to interpret them all together three-dimensionally. Trends, threshold, and their relative weightings. The next one is stock on market. So ideally we want to see, of all the properties in a suburb, less than 1% of them for sale at any one time. I'm kind of giving away my secrets. If you're a client, don't worry, this is just the surface level stuff. It seems really interesting, it is, but this is very much surface level. You can't make an investment decision just on this, but I'm trying to educate you a little bit at least. So stock on market right now is about 1.1 or 1.2%. When we were buying, it was about 1.1%, still a little bit high. We would like to see that come down, but this metric is less important than others that are much more stronger. Okay, so we're a little bit lenient on this one, but I love the trend, and that's why I'm so confident that the suburb is going to continue to increase. A really important thing, vacancy rate. Look, this is what everyone looks at. It's useless when it comes to predicting capital growth by itself, right? But obviously we're landlords. We want to find a tenant easily. So right now it's less than 5%. And when we were buying there, it was also less than 5%. It's had a bit of an increase in the interim, but we're still talking like 0.1 or 0.2%. So that bump has not been significant. Statistical reliability. This is a super important one. So if you go on Australian Property Monitor or Residex or Price Finder or RP data called Logic, there's a whole bunch of charts and pie charts and graphs, but you don't know how reliable that data is. Just because there's a data point in front of you for a suburb doesn't mean that it's actually reliable. So what I like to look at is statistical reliability, which tells us how much sales or how much listings have actually been transacted in a particular location, and is that enough of a sample size to be confident in the data? And here it is, so we like to see that. And then finally, average vendor discounting. So the discounting that vendors have to do in order to sell properties, their own properties. When we were buying there, it was around 3%. Now, well, earlier this year during COVID, it was even less. It was like 1% discount, which is nothing. It's kind of trending up a little bit, up to 3%, but it's still negligible. So we really like to see that. And I just want to make the point as well, you know, just in case you've watched all the way to the 13-minute mark on this video, hopefully this is useful for you. I just want to make the point that Mildura has been increasing consistently month after month, quarter after quarter, every single time period for the last 2.5 years, ever since we started buying. We bought right at the bottom. You can predict the bottom of markets, guys. You know, not every single time, but with science, with data, we can actually do this pretty well. And it's been increasing consistently, even through COVID. So those of you who are naysayers, and I respect your opinions, but those of you who say that COVID has impacted property markets, look, just look at Mildura. In the last, well, let's say since January, it's increased, not huge, $20,000, but that's off a base of $300,000. So from a percentage perspective, it's not bad for 8 months. It's going to finish this year at close to a 10% growth rate, right? So that's not bad. Of course, we're talking a fairly inexpensive location. It's not $1 million location. 10% doesn't get you $100,000. But what I promised was not absolute growth, but rather percentage growth. And if you buy Mildura, I can tell you, looking at the data, you will get growth 5 to 10% in the next 12 months or so, 6 to 12 to 18 months, probably less than that. And I just wanted to do this video, right, not to kind of, through a clickbait style or anything like that, but I just want to demonstrate. I mean, we've taken 15 minutes. There's much more time I can take to illustrate why data is useful, But you can tell that these data points, almost no one looks at them, right? We're not talking macro stuff here that may or may not be right. Data is always correct if you know how to interpret it. And if we look at those 3 dimensions, trends, thresholds, and relative weightings across 30 to 35 data factors, and we only picked on 5 or 6 today, we can actually say what a suburb will do. Not to the exact percentage, but relatively across, relative to another suburb. And when you apply this data across the 15,000 suburbs across Australia, you can actually say which will perform the most, right, relative to another. So this is really powerful, and if you learn this science, and look, you don't have to go with me, I don't think there's anyone else teaching the data science of property economics, but if you do want to learn it, this is what I teach, and you don't need to be a rocket science, and maybe other people teach it, I don't know, but if you vibe with me, this is actually doable. And if you learn this, you don't ever need to guess in property again. You don't need to go to a buyer's agent. You don't need to go to a property consultant. You don't need to even come back to me. You don't need to forge for podcasts and opinions and tips and hotspot reports, but that are all just marketing gimmicks. You can actually be safe that every single property that you buy is going to be positive cash flow, high growth, not just after 20 years, but in the short term. And in that way, you can actually accumulate not 10, 20 properties, 4, 5, 6, 7 properties, enough to retire that debt off in 15 or so years time, 10, 15 years time, and actually develop a passive income. It's the science of property investing. That term gets bandied around a lot. There's a few good buyer's agents that do this as well. I can definitely recommend those people to you if you're not interested in learning yourself, but you can learn this yourself. It doesn't take that long, all right? And by doing this, you can actually, within about 4 or 5 hours, pick your best suburb across Australia. It's pretty revolutionary. Property Education 2.0, you don't need to go to a seminar room and be spooked. You can do this yourself. So hopefully that was super useful. I think this is the longest video I've ever done. I think I spoke pretty fast because there was a lot of things to cover. If you found this useful, can you just let me know? And I'll do more of them, right? Just comment below. I'll put this on various social channels, so wherever you see this, just comment below or DM me, and I'll also put a link somewhere, probably in the comments, and you can learn more about how to do this, okay? I'll be happy to help you. There's, I don't actually think, normally I say there's other people that can help you as well, but I don't think anyone does teach you this stuff. So if you do want to learn, I'll be happy to help you, but if you don't, then go buy in Mildura, although we're not buying at the bottom of the market like my clients did. There are better places to invest in Australia right now, but if all you're looking for is another $40,000, $50,000 gain in the next 12, 18 months or less, go buy in Mildura. All right, guys, my name's PK. Catch you later. Bye.